weekend all. Ira Epstein of Linn Associates with your weekend edition of your financial markets, and this is for Friday the 31st of January 2020, getting on to 5 p.m. Central Time. I just watched the Senate vote. The president will not have witnesses called in his case. I do not expect that case to be ending tonight. I think from the way that Mitch McConnell wrote a text, it could be a few days as they go from points A to Z, but it certainly looks like the president, it'll be a very slim chance of him having been found guilty. You need 67 votes or so. I don't see where that exists. The other part of the day that happened, of course, is we're watching how the CDC, the State Department and all are cracking down now, and a hard crackdown on anyone that's going to China and coming into the United States. I'll let you read about that over the weekend, but it's a hard crackdown. The financial markets got hit today hard. And they got hit, I think, in part because they're worried about what Monday brings as you get a weekend tally of the coronavirus. But the Chinese stock market has not been open because of the Lunar New Year. Now it's going to reopen. Is it going to be down 3%, 5%, 10%? I don't know. But I know that the emerging markets have that built in, not that how much it's going to open lower. They have it built in that that market is part of their value. And as these funds have to adjust to whatever happens, I think you scared the heck out of everything today. So a big down day here. You're taking out the year's gains. So January, well, monthly chart we'll take a look at in a month and get a feel for one of them at least. Mixed day in the currencies. I was a bit surprised at the strength in the euro considering all that's been going on. Energy markets still staying on the weak side. China is the biggest importer, right? And they're one of the largest consumers. And we haven't seen yet anything just yet out of Chinese buying in the ag markets. But remember, they have until the 14th to begin. They're still in that 30-day signing period. And all I read about is all the stocks, vegetables, potatoes they're using up. They're going to have to replenish all over their country because of this, what's going on. So when we take a look at the market on a monthly area chart of closes, finishing the month off, we finished down 0.25% on a monthly basis, got that? And you're down 7 points on the month. That's the way to look at that. When we go to the weekly chart, you were down 2.11%. Last week, you were down 0.95%, and that was your highest weekly area chart of closes. So when you add what you're down 0.95, and you're down 2.11, you're down 3% on a close basis from the highest close that you had. When we go to bar charts, you can see that you're down this week for the week 2.11%. And on this week, you were down 0.95. So they're going to be the same because I'm still looking at the close. That's what I want to make clear to you, whether I'm looking at a close-only chart or this type of chart. Now we start looking to see what's going on. You still have a pattern that's been in place of higher lows on the swing line and higher highs. My charting course teaches you how to do this, but the market looks back. So this week you're looking to see, do you have a lower low, do you have a higher high, do you have an inside week, an outside week, up or down? And then from that, the technique that I have plots that out for you. So to break the uptrend that's been in place, and that uptrend began honestly back here in June. It's hard to believe, but that's when it began, and it has run all this way through. You'd have to take out 31.81. That could be a sign that the market's seeing a change for whatever reason is going on. We're also looking at moving averages, and right now the support comes in at 31.4375. Now, if I take a look at how much it's been gaining on a week-to-week basis, on average, and that's all I'm looking at here, I'm going to call it 14, 15 points. So if that number gets taken out, in other words, the support won't move up to stop the market from 31.81 being taken out. That's the important thing. If you get to it, you break that pattern in the chart. When we look at Bollinger Bands, the market's been riding that upper Bollinger Band since October. So when the market got into this pattern that it would just run, it didn't get excessive. On a weekly basis, it was not staying over at all. Daily charts were, not weeklies, and weeklies help you smooth things out. Momentum is turning down right now. It has turned, past tense is what I should say. The red line's turned back under 80, and while the bias is up and the trend is up, often momentum leads what's going on in the market in other spots. In the NASDAQ, you have not yet turned the momentum down. It's weakened, but it hasn't gotten under 80 yet. The trend is still up with higher lows, higher highs. Here you'd have to come through this last break low, and that low was, 86.78. Now, if we take a look, this 18-week average is far away. If you're going to take that, in other words, it's not going to get up high enough to support the market if it wants to get under that. So that could be another weak part. Let me correct this and help you. When you had these corrections, you didn't go to the 18-week average either. There's no magic here. You're still in an uptrend. This is a correction, no more than that. Then we get to the Dow. Momentum turned down. So momentum down, the last break low was right here on this day, and that was 28,084. Now the break low that we have today, 28,105. So if the market's going to make it to the 18-day average, which it's done in the past and plays around, you're going to lose the pattern of the higher lows, higher highs. If you closed underneath the 18-week average, could you get back down into this area, a big break that could carry to 26,351 to 26,000? Well, you could. There's a pattern that you've done that before. See them all? So that's what I'm pointing out. We're in a corrective mode, don't know how deep the market's going to go, and obviously the event that everybody's going to look at is what's going to happen on Sunday night when the Chinese markets reopen. The good news is we get to see it in the evening trade. Stock indices, people won't until the markets reopen at 8:30 in the morning, but they'll feel the impact, that's for sure, one way or the other. In the Russell, the daily charts have been weak. You know that I've been pointing that out if you're watching them. And you now pulled back to the first support at the 18-week average. This is very common. If you come back on a chart and you look at when the market, I'll go first down. Market's down to Bollinger Bands. If you rally up, it's not uncommon that you fight a battle and keep coming and which way you're going to go from it. You're staying within the bands and you're fighting against that average. Then you went into the uptrend, as you can see, and now you're pulling back finally, and you're right back into the combination of support, not a trend, that's not what I'm saying, of support between 16, let's call it 1613 and 1576.70. Momentum is down. The bias of the market is up because you close 1614.70 over the 18-week average, but you've been out of an uptrend now because you broke through this low. And that trend was broken on the weekly charts this week. Prior to that, you had the uptrend. Even though the daily charts were weak, this market was still on the weekly chart up. That part is gone now. So you've got the daily trends down and now the weekly trend out of an uptrend. In the VIX, the market is adding volatility. It's moving away from this 10 level, let's just call it that, and trying to see, can it break out and go to another level? Tonight on the finish, we're up to 1884. You were just down recently into the 1112 zone. So you're adding some volatility to the market. What is the trend here? Up. Now, the resistance is staying over the upper Bollinger Band. It did it today, that number 1728, and you do it from time to time. The question is this market going to leave this as a trade bottom, the Bollinger Band, and expand the market out? And that's what I think is going on right now. In the 10-year notes, number one on the weekly, momentum up. Remember, we don't look at overbought, oversold on the weekly. It's either pointing up, neutral, or pointing down. First time the market has gotten to the upper Bollinger Band, hasn't done that since last August. And there you are. You're in a resistance area. You've taken the yield to around 151 or so in this market. So you got to keep your eye on it, but you're at a resistance zone. Dollar index, as much as you've rallied, you've stalled out against this 18-week average, and you've been doing it. So there's no play that I see there. Eurocurrency. Excuse me, the markets has a pattern of sideways action. Lower low, higher high caught in these narrow bands. Momentum is just flat, not helping you. You're just sort of stuck right here at that number. In the peso, the market has gotten up to the upper Bollinger Band area, failed, and has an outside week down. Outside week down might lead to this market, if you lose the momentum early on, getting under 80 here, of the market wanting to retreat back into this 52.07 area. I'll be looking at that one. Canadian dollars in a downtrend. You have lower highs, you have lower lows, you're under. And you had last week fought a battle to hold the 100-week and the 18. And momentum was already down, so was the swing line. Now you're in that downtrend. Question, do you want to make a run to the lower band? You haven't done that since last June. Resistance, 75.95, 76.02. Japanese yen, for all the play on the weekly charts, not the daily, the weekly, all you did is rally back to the neutral line and you're sort of sitting there. Momentum is up. The market's got a bias where? To the upside, but you don't have the swing line. You have a higher high, lower low. Bitcoin, the first upside target on the weekly since this market started coming back up. And remember, we're dealing here with that halving situation. So there's a lot of Bitcoin traders that understand the algorithms are going to cut the amount of mining you can do by 50%. You'll put in the same effort, same cost. You're going to get 50% of the coin. It's cutting the supply back, and those traders are aware of it. You're back up to the upper Bollinger Band. Trend is up, bias up. You're into a resistance area at this point. In the oil energy area, neutral would be the 18-week average at 583. You're over that at the 660 differential between Brent and WTI. When we take a look, though, at the chart, you're in a downtrend. You were in it last week, by the way. You had lower highs, lower lows, momentum down. If it's going to break further, the first target may be the lower Bollinger Band. That's what I teach. It might get down to it. You're pretty darn close to it. Downtrend in WTI, went right to it. I think the pros took money off the table. In gasoline, the daily has lost its embedded reading, not the weekly. So the weekly stepped out of the Bollinger Band. If it's going to step back into it on the weekly, it's got to pop over it. It's 2 weeks in a row out of it. You generally don't stay a lot of weeks out of it. You can get it. It happened back here. But 5's pushing it, so you'll know it's going to take that, I guess, the coronavirus, if that's going to be the case. If you see it popping back into it, the odds favor what's going on is the market searching for that spring demand low. I know it sounds funny because we're in January, but look at your seasonals. In the heating oil, you've had such a mild winter. Down just like the nat gas. They both coming down on you. You know, I talk about this and a lot more to start your day off. I'm getting up because of the volatility now at 4:30 in the morning, putting out my update about 5:30 in the morning. I start recording it now. So I'm getting it in your hands bright and early, in many cases before you've woken up. And the reason is there's so much to tell you. I've already read what's going on, be it in Asia, Europe, and I'm seeing the reactions to what's happening, and I'm prepping you, giving you trade ideas, going through the charts. We're going to review on my morning futures video 40 futures charts. They're going to work the same way. We're going to have more studies than you see in this. We're going to try to figure out where the support resistance is. I'll throw out trade ideas, tight stops in many cases, objectives, just like we're talking, to get you going and give you that feel that if you had your own thoughts, what is another chart saying? Maybe you like that idea. So the idea here is to give you confidence. I'm not going to do your trading. I don't want to do your trading. But I'm going to cover the markets in this exact sequence with a pull bar so you can get right to the areas you want to see, the markets you want. I cover them all in the morning, 40 of them on that. How do you get this? It's really simple. $7.95 for 30 days. Doesn't matter where you start. It's not a monthly basis. It's a 30-day basis. You see if you like it. If you do, by the way, sign up for it right now. I'll give you a few weeks free of my Spider ETF video, if you haven't seen that one, because I'm doing that. They're already out. I record those typically right after the markets finish because stocks close at 3 o'clock, so I get those done earlier for the traders. But you'll see what there it's all about. How do you do this? You go to our website, under the word research. It explains it. Ira's morning video. Click on it. Sign up right there. We'll have it in your hands come Monday. I'm Ira Epstein. You have a great weekend. I'll see you then.